Welcome to Money Me. Happy New Year. Happy 2025. 2024 is behind us. I appreciate you guys following me. You do me a favor. It doesn't cost nothing. Like and subscribe. I am not a professional. I just basically make videos here to share my experience of buying stocks, selling stocks, mutual funds, options, bonds. Been in business, have an online business, used to be in the restaurant business, and really just like to make these videos, even though I don't make them enough, because sometimes it's just worth sitting. But I wanted to make a video what stock picks I would have for 2025, and honestly, I just don't know yet, and I didn't want to rush because I'm in some positions now that I'm not closing out. And one of them here I have featured, and that's the thing is I like to use YouTube. I like to use available websites. I like to read Investors Business Daily. I get the Value Line 600. I love reading that to see where I try to basically the multiple accounts that I manage. I try to basically go for a 30% return per year. If I can get that sometimes on a stock in 4 months, this is strictly a lot of times basically a trader. Now, have I held stocks for 2 years? And yes. Have I held stocks for 2 years and they've done terrible? Yes. Have I held stocks for 2 years and got out because impatient? Netflix. And the damn thing skyrockets up? Yes. It happens. This is what you learn from. But basically with the two accounts, I think one was 21.9, the other one was 25%. I think the market was up 23%. It would have been higher if we sold everything the end of November, beginning of December. Some of the stocks that got whacked, and I'm going to talk about some of those stocks today. The market was down 152. I'm on the go today, and I was watching it, and it was up, it was down. I think it finished down 152. The Dow, that is, and that's really nothing. It's 0.3%. 152 sounds like a lot, but when it's at 42,300, it's nothing. But I am concerned that the market, I feel like it takes you 9 months to get 25%, and it takes you 3 months to lose 25%. So I hate to see that. So did make some. Even my wife, through her work, has a 401k, and we were 70%. Well, the split was 70% stocks, 30% bonds. Now, in the stock, I think it's Vanguard. There's stocks in there, but there's also bonds, because it's based on her retirement year, which is supposed to be about 10 years away. So it's one of those 20, 35 accounts where they'll keep a certain amount of bonds, but still mostly stocks. So right now, though, that account I just switched up about 9-10 days ago to even with the money that's going into the 401k, it's mostly hitting bonds right now. So it's just the money market bond, just to be conservative, because I am concerned that there's a correction. And it drives anybody. I mean, the little bit of money that I even manage, and anybody that, let's say, has 100,000, and when you get a 15% correction, like an average, and all of a sudden your account's worth 100, and then like 2 months later it's worth 85, you're like, oh my, that's still a big. You got to get used to those swings, but it happens. I get it, but and I know it sounds like I'm trying to time the market and stuff like that, but I think we all want to not also be greedy. So let me this site, I like this site. Now I'll use, like right now I have I have CNBC pulled up. I use the Webull desktop app. I like that. Primarily right now the stocks are in a Vanguard account through a work. Scottrade. There's about 4 accounts that I have stock trading power. So even though these accounts aren't legally mine, family members, I still have trading power. That gives me, they have to sign a paper, gives me access to basically access their account and buy and sell stocks and stuff on their behalf. I don't do no options in those accounts. I've done options in my own account in the past, and it's just too much of a roller coaster and a risk. I've done where I've made 1,000 into 10,000, and I've already done where I bought 200, and the things were overpriced. And before you know it, it's like, wow, I'm down 1,500 this month, and yeah, I only did $200-300 contracts. and it happens. What you hope for is that you do one contract at 300 and you get 1,000. It makes up for those others. But what happens is in an option account, it's cash, but when you have it set up as a margin account, you have to keep a certain amount in there. And I just don't right now feel comfortable. I seem to do better always buying. I mean, there's stocks I've bought, I've kept a year and a half, and then boom, it runs. PayPal. PayPal was a good stock for us last year. Got it at 50s, got out in the 80s, 90s, went down. Actually, back in though. Back in. I still feel this is gonna be 2025. This will probably be back to $100 stock. You know what? 85 to 100. What is quick math? What is that? About 20%. That's good. So if the market winds up being flat or down 10%, and we get 20% in PayPal, we're beating the market. So that's great. 30%, basically, we can double the accounts every 2.5 years. That's why I always use that 30% goal. I know you watch maybe other YouTubers, we'll call them, that make videos, and Jeremy comes to financial education. Guy's a smart guy, and what he's done with Tesla, Facebook. Now I see Tesla was down today, but yet he's held on to it. But when Trump won, it went from 270 to 440 like that, and now today, what was it? I'm moving the wrong screen over here. I don't want to close this stock. Stockconsultant.com is a nice little kind of shows you where things are. Yeah, closed down 6%, $24 through 379. So in the past month, yeah, that stock was up in as high as, wow, was it? It was $484 the week before Christmas. So it's down $100 since then. I mean, if you own a lot of that, that's a big. Who wants to give money back? And I always don't like to give money back being greedy. I mean, I know when I seen Jeremy, years ago, you would have thought, oh, sell it, and when it split, and it still continued to run. I was in Facebook, got out too early. Amazon. I remember Amazon crossing like last year around 125, and it went to 200. So, but I just stick to my conviction of trying to really get a 30% return. Amazon today. I mean, Amazon today is what, let me pull it up. Not bad today. 220.22. So over the past year, the stock had a 52-week range of 144 to 233. So it's done tremendously well. So all right, so stockconsultants.com. I know I could pull a couple. They want you to pay, and that's why you see these little advertisements, because those advertisements are not benefiting me. So I'm doing a screenshot, screen share, screen record to do this, just to kind of show you. And you know what? Maybe I'm advertising for them. Stock Consult. They're not giving me no more money. But one of the stocks that we're in is Adobe, and it took a big hit. They came out and their earnings not quite what they thought they would be, and I think it's stabilizing here. If you really look in the past, it was it was one of those things I saw on Twitter, and I got in probably around 535 and was in here and was hoping that this was going to be one of those 8% pops and was going to make a quick couple $100. You make 8% on a trade within a week, where you're trying to get 10% every 3 or 4 months, but this luckily didn't have a lot. And I think I bought 2 separate accounts, and we did dollar cost average down a little bit, but you did see it was what, 75, roughly 75, down $75 that one day. It's stabilizing right now at around, what did it close at today? 441. It had a high of 450 today, 447. 5 days, 551. Yeah, it's been in that range, and so it's been in the 440, 450 range. But I think there's going to be money to be made, but yet there'll still definitely be pressure to sell it, even at this break here of 495. So it's going to take some time to get some stability again in Adobe. A lot of these stocks you got to be patient. You're not going to make your. I might make 30% on this stock. But I may have to it may have to take 6 to 9 months. I'm okay with that. But it's not a big position in the account. I think right now in the one account, um, we're holding around 8 to 10 positions on average. Once we got a PayPal grew a lot, so we had to start diversifying some of that. I am keeping some cash right now, about 8% cash in 2 accounts. The other account, talk about my wife's. That's always a contribution through work, so it don't matter. You know, always kind of getting in there when the market's up down. That one don't matter as much. That one still did. I don't know. I think it was like 17% on that one, but I like the technical analysis of looking at charts, because what happens is and it's always true, is let's say, for example, someone got in at the they thought the earnings were going to break out, and they got in like me at 5:35. A lot of people, what'll happen is they have that position. Now, some people will, oh, the hell with it. They'll cut their losses. Some people that are traders, it's down a certain percent. They just cut their losses. They move on. They don't care. They put the money into work. They try to, make another play, and it'll be fine. And then there's the other people that get into it, and their mentality is, once it gets back to break even, they get out. They've made nothing on the stock, but they'll get out. Keep in mind the timing of that stock going down in mid-November, December, pretty much December. You got a lot of stock tax loss selling, because they're like, you know what, we lost. In an IRA, 401k, you never worry about that, because you don't have to report that. That's all, deferred as far as the tax consequences. So you could see here, I mean, it was 1, 2, 3, 4, 5, 6, 7, 8 candles in a row, roughly, until we had one big green candle, and it seemed to be hit like about 15, 20 points below that day. So it's been in that trading range, if you look, really for the past about 9 or 10 trading days. To me, that's a sign that people are taking positions. But now I think with the first of the year, people there obviously the market's down. Now, if you get this stock Adobe to be up a day that it's down, that really means that there's some good strength. People are putting money to work. What you got to hope is somebody moves. That people are moving. People are always moving around, whether it's long or short, depending upon what the market's doing. But that's not to say that if the market pulls back, let's say 10 or 15%. Now, this stock has already pulled back approximately 25%. Now, let's pull up a 1-year chart here. But the stock was $640 back in, so it's really had a 200 point drop basically from that. So we're going to hit resistance, obviously, at this purple line, which is 495, which coincides with the 50-day moving average and the 200-day moving average. We get over the 200, but that's going to take some time. It's going to take a good quarter. They basically dropped because of the news of AI, that they've been investing a lot in there. But fundamentally, from what I see, this stock is supposed to earn about $20 a share next year. So I think, let me pull up, let me see, Adobe. Not all these sites always have, it's always the earnings, behind us, not, projected earnings going forward. Yeah, and a lot of these companies are pretty. So they hit their target, but the problem was their language that we're not sure, we're going to probably still lose money on our investment in AI, and sometimes these companies it'll take a year to kind of get money back. It's got a market cap of $194 billion. 52-week low, 52 high. Revenue, let me see. Earnings per share. Now, I think this last year, was $12.41, and so basically this year $20, and if it's growing 15, this. I think, I don't know, and this is always my opinion. I'm in the stock, so obviously I want to make money on the stock. Yeah, what are we, 2026. Yeah, 2026. Yeah, 2026. We're I'll show you what I'm looking at real quick. So this is from CNBC. So you can see here quarter one, quarter two, quarter three, quarter four. Okay, 2025, 2026 is, so 2025 we're looking at roughly 2021. That's rounding up. 21, 20, 22, you know. So even though so it's probably fairly priced right now. You know, obviously if stocks are correcting, that's not going to be good as far as people getting into that. But again, I'm looking for it. Our cost is right now around. I mean, we're definitely down money, but let me just pull up one of the accounts. I don't mind guessing like $1 here or there, but I really like to make accurate videos to, you know, see. Even though the market was down today, our count was up 1.81%. So Adobe right now gain 448.32 is what we're in on that one. That's good. It might be another account that we might be in closer to 520 average. So right now at 440, even at 495, so it's 50, about 50 points higher. You know, there's 10%. I'll see what it does, and I'll probably sell it at that 495 range unless it breaks out in strong volume, and you know, look to get back. If it breaks out on strong volume, then really the next target will be. For the 200-day moving average is around 510, and that would be 510. So even to make 30% on that, let me pull up a calculator. I'm rounding up here, 450. It's 448.32, but I'm just rounding up just for 30%. So $135 we would need to. So actually 133. So 580 would be 30%, but still, even at a 15%, in other words, if I get 15%, I move on. And don't forget, it's not the only stock that I'm in. So 440, 8 times, so that would be 60. So yeah, so basically at around 510, that's 15% right there. So in the next 6 months, I'm halfway at the 30%. And is every stock going to do that? No. I mean, again, last year we had a 25. We would have had closer, but the market pulled back on. I mean, there are some stocks. We were lucky. There were some stocks that they pulled back a lot bigger. But guys, I went a little longer than I like to because I know it's hard to get people to. Especially I talked about Adobe. I'm gonna do more videos, and sometimes all I'll do is I'll record 2 or 3 of these in a row, and then kind of release maybe 2 a day or release them out over time. But I enjoy talking about the market. It's something that every day that I do on top of the business and stuff like that. But tell me what you guys think of Adobe and what's your current outlook on the market short term, and let me know what you think. Hey guys, do me a favor. Subscribe to Money Me. It's free.